Okay, so here we'll take a look at exercise 1412, so entry for redemption of bond. On January 2nd, 2015, Banno Corporation issued 1.5 million of 10% bonds at 97 due December 31st, 2024. Interest on the bonds is payable annually each December 31st. The discount on the bonds is also being amortized on a straight line basis over 10 years. Straight line is not materially different from the preferable interest method. So the bonds are callable at 101. And on January 2nd, 2020, Bono called 900,000 face amount of the bonds and redeemed them. Ignoring income taxes, compute the amount of loss, if any, to be recognized by Bono as a result of retiring the $900,000 bonds in 2020 and prepare the journal entry to record the redemption. So let's kind of set this up first. So what exactly happened? And what I'm going to do for this problem, this is actually suggested to me by another accounting instructor, is I'm going to record this as two separate bond issuances. And we'll see why we're going to do this in a moment. But here, this bond is being issued at a discount. What does 97 mean? It means I'm going to be getting 97% of the face value in terms of my cash. So over here, we have 1.5 million. Okay. And I'm going to break this up into two parts. I'm going to break this up into 900,000. I'm going to break this up into 600,000. Okay, so we'll see why momentarily. So if I'm getting 97% of this in cash, right, the difference between these two here is going to be my discount. So for this first one here, for the $900,000 bond, we'll say it's at 873. I'm going to have a discount on bonds payable. And this is going to be at 27,000. And I always show my bond payable at the full amount, or 900,000. Do the same thing over here for the 600,000. Cash I received is 582. And so if I was to lump this together as one journal entry, it would be right over here. And just to make sure, this is 3% of the face amount. Okay. So what happens every single year? Well, they're going to pay interest. And the cash being paid for interest is always going to be, as we look at this over here, and we can do this, well, to kind of do the same thing. So whenever I'm making an interest payment, when I have a discount situation, I'm always going to debit interest expense. I'm going to credit discount on bonds payable. And I'm also going to credit cash. And remember, right, we need to get this discount down to 0. So when the bond is fully paid, this is what it's going to look like. So because I'm using straight line for my amortization, I'm going to be dividing this by the number of interest payments. It's 10 years. So over here, okay, if I was doing this on a gross, well, let's just do each one of these. So for here, the cash I'm paying for interest on this bond right here, and this is going to be 12/31/15, is 90,000. The amortization of the interest here is going to be 27,000 divided by 10. So my amount of my interest expense is going to be 92,700. Similarly, over here, the amount of cash I'm paying for interest is going to be 60,000. Amortizing this bond over here like this is going to be 1,800. So my interest expense is going to total 61,800. If I were to combine these journal entries together, my total interest expense is 154.4. My discount on bonds payable is 4,500, or this 45,000 divided by 10. And the amount of cash I'm paying is 150,000, or 10% of this 1.5 million. Okay, so What's going to happen is because I'm amortizing the interest straight line, it's going to be the same 12/31/15, 12/31/16, 12/31/17, 12/31/18, 12/31/19, 12/31/20. It's always going to be the same. So as I look at my discount on bonds payable, so we're now redeeming them and the bonds are callable at 101. So I called on January 2nd, 2020. Right, so on 1/1/20, I'm calling these bonds. So what is that going to cost me to basically to retire these bonds? Well, I'm going to be crediting cash for 900,000 times 1.01 or 909,000. I know I'm going to have to take the bond payable off of my books. Over here, this is going to be at 900,000. But what I need to do is I need to get rid of that portion of the discount as well. So let's take a look at our discount on bonds payable. So our discount on bonds payable for the $900,000 portion, my discount on bonds payable started off at 27,000. Every single year, 2015, 2016, 2017, 2018, and 2019, I went through and I amortized this discount by 2,700. So at the end of 2019, which was right before I did my bond redemption, my total discount on bonds payable is going to be 13.5, or my amortized amounts. My unamortized balance here is 13.5. So similar to me getting rid of the bond payable, I have to get rid of this discount on bonds payable, which means I'm going to credit my discount on bonds payable for 13,500 because I need to get this down to 0. So now as I look at this, I've got 922.5 of credits, and I've got 900,000 of debits. So this is going to give me a loss on redemption of 22,500. And this is kind of, if I needed a balance here, it'd be a gain, here it'd be a loss. This all goes back to the sale of equipment. Okay, so let's go back and take a look to where I got lost, and right over here. So ignoring income taxes, what amount will be in 2020, and prepare the journal entry, record the redemption. So just to make sure I'm going to basically not look at the answers. I'm pretty sure that's right. So in any event, I look forward to seeing you on the next video, and have a great one.